You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim, and Merry Easter.
Well, Jim, thanks for having me, and Merry Easter back.
Tim, you said you received an email that posed a question that a lot of investors are wondering about right now.
Well, yeah, these rallies do a number on people, and I actually got one guy, and I'd like to address it head on. Guy asked me, or he told me, he said, look, you obviously don't know what you're talking about, you should just shut up. And, which, I'm kind of taken back by somebody being nervy enough to send you something like that without really understanding, but then that's the point. People don't understand. And I've said all along that there would be false bottoms, false hopes, and that people did not understand the environment that we're operating in, and that is why it made the market so dangerous. And besides all of the work that is spelled out in the actual research letters for the people that are reading it that states the case, and hard statistical data that we are operating in a secular bear market and that we have been, and that it's a counter-trend rally. The people that's actually reading the research get that. The people that may just be listening and taking a pot shot is just, they don't know what they're talking about. But I went back, I looked at some charts. Now, this is not a justification. This is not by no means is this my only justification for this rally. Like I said, you're getting the letter. You know what I'm looking at and the things I'm saying. By every measure, it is a bear market, and it's a counter-trend rally within that bear market. And you can't control, let me preface this a little bit more, talk about this a little bit more. You can't control how long some of these rallies last, and every setup is different. Some of them come apart much faster. 2000, we got the setup in early 2000, and really the market didn't do anything until late 2000, into 2001 and 2002. So that setup lingered. In 2005, 6, and 7, the market stretched and stretched and stretched. But then once we got the setup in 2007, it came apart pretty quickly. And so every setup is different, but it's there, and how fast or slow it progresses from that point, that's outside of my control. I can't help that. I just know what we got. But looking back, in 2007, between 2007 and 2009, for example, there were 5 false bottoms, and there was one 15-week rally. I went back and counted it, one 15-week rally. People forget this. I didn't do the calculation to see what kind of percentage it was, but it was a healthy rally, and I don't remember the emotion surrounding that specifically now. I need to take notes on some of these things as we go, but I'm quite sure a 15-month rally people thought it was over. That was a low that occurred in January of 2008 and lasted, like I said, I counted it as 15 weeks. If you look back in for example, in 1929, after the initial leg down, there was a 5-month rally from November up into April. And I have seen the documentation and what people were saying then, and everybody thought everything was okay. And it was there's no shortage of material about the things that were written. I've got a book on it actually with all kinds of quotes in it. Everybody thought everything was fine. And then there was 6 false bottoms all the way down into 1932. If you look at even 1966 to 74, people don't realize this, but you had a 4-year cycle top and the secular bull market top in 1966. The secular bull market ran from 42 to 66. We had the top in 66, and then that was followed by a 4-year cycle low in 66. You had the high and the low in the same year. And then there was a 2-year rally that carried the market to a new high in 70, as I recall, or maybe that one would tested a new high. I'm saying that from fuzzy memory, but if it did make a new high, it was close. But it was a 2-year rally that was then followed by a decline into to new lows. And so there's always these counter trend rallies, and you can't control the fact that you have a setup and the duration of the rally. I mean, that's the bear's job, if you will, is to confuse the most. His job is to steal the most wealth from the most people possible, and that's exactly what we're seeing.
Well, in Europe, too, where they have negative interest rates, I understand Lloyd's of London had a record loss because they don't have any way to invest their money to make money with negative interest rates. Pensioners are taking a huge shot because they lose money if they try to save it. And insurance company, I was going to say, the banks are also taking huge shots now because people don't want to put any money in the bank if they have to pay for it.
Right. And see, that's part of the manipulation, is trying to force people into the market with playing with interest rates and that sort of thing. I mean, it's obvious, and consequently, that's what's drugged these setups or in these counter trend rallies and this whole process, this extended cycle to begin with. Out. That's the problem. The market is not acting. I hate to say this, but it's almost true. It's not acting in a truly. We don't have a. Well, I'll just say it. We don't have a truly free market. I mean, we still have cycles in the market, and and it's still going on. We still have the statistics all still apply, but by the intervention, by them messing with it, they have extended and distorted some of the cycles and stuff. And it's just, I mean, you still see them, but then it lingers. And so, from that perspective, I think, obviously that's the problem. And so these setups it's like watching paint dry. It's taking forever.
Are central bankers and governments really deluding the people about the true state of what's happening?
Yes, I think so. The people do not understand, and that email is evidence that the people do not understand the environment in which we operate. And I have said all along that was the problem. And or the reason, I should say, that makes this market the most dangerous, I think, since 1896, since the inception of the averages. People do not understand the environment. They think that the powers that be can control this forever and ever and ever. And that's just not true. They made it worse. They have made it worse. And just think, use your brain and think. And I'm not saying you, I'm saying people in general, think. Use your brains and think about something. We saw the market tried to top in 2000 with the secular. I say tried to top. It did top. That was a secular top. And then as we went down into the 2002/3 low, we saw, that's when we started to see the Fed really, take an active role in trying to manipulate and pump and reignite the secular bull market. And what did they do? Yes, they pushed it to a new high, but what did they do? They created the worst financial crisis since the Great Depression. And then the market crashed and went to a new low. And here we are, we come out of that low, and what have they done? Even more of the same. Even more of the same. And yes, they pushed it to another new high. And yes, it's lingered, but they've only made matters worse. They haven't fixed anything. Nothing.
Well, what they did was they encouraged CEOs to buy back shares so that they would get bonuses, but they didn't open factories. They didn't employ more people.
Exactly, and that's what I mean by fixing anything. The average person, are they better off today than they were 5 years ago, 10 years ago, 15 years ago?
Absolutely
you
not.
Look at everything from, well, I can't say fuel prices because fuel prices are down, but look at everything: healthcare, rent, the price of homes. Go to the grocery store, the price of a vehicle. Everything is up. Just going to a restaurant. It's really amazing when I sit and think back. When I moved to the little town that I live in, there was a cafeteria I used to go to. mainstream, not a little hole in the wall. I mean, just a normal little cafeteria. And the wife and I would go there and eat, and it was like $13 for both of us to go eat. And now, I mean, I went to a burger joint the other day and got a hamburger, and it was $8. The price of existence has gone up. Wages have not changed. They fixed nothing. They've made it worse.
Well, it didn't help that they decided to take housing and fuel prices out of the equation that they used to calculate inflation.
Of course. More twisting of the numbers and deceitful information to create the illusion that things are something that they're not.
We'll have more with Tim Cyclesman Wood right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band coming to Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see for crude prices right now?
Well, the last time we talked, crude oil has been rallying for a while now. And last time we talked, you asked me about, where we were with the cycle. And I told you, I said, well, I'm not sure if we had that higher degree. I think I said that we had the intermediate degree low, but I wasn't sure if we had the higher degree, what I call a seasonal or annual cycle low. And since then, I've gotten confirmation that yes, we have, and that's really just an academic point anyway. As far as the degree of the rally is all it does for me is confirm that. But crude oil, I think ultimately it's a counter trend advance. It is we had a bottom in February of 3 degrees, a short and intermediate, and then more like like I said, an annual degree cycle bottom. And so now we have a short-term top. I'm not convinced that the intermediate degree and higher degree rally has run its course. Have no indication that has occurred at this point. I need to see what the structure looks like as we come out of this short-term top that we have. Ultimately, I think that it is a counter-trend rally and that crude oil, probably moves lower still yet.
And of course, we have the experts telling us that the storage facilities are full, and they have no idea where this extra 1.3 million barrels a day is going to end up, because rail tankers are full. They have old tankers in the ocean. They're full. The storage facilities are full. Where are they going to put all this extra oil?
I don't know. I guess we're going to burn it. And people justify this is another point with the media. Do you recall back in 2007 how everybody was talking about 2007, 2008 when everybody was talking about peak oil, and that was the justification for crude oil being in the 140 range and that it was going to 200 and higher was peak oil. It was, if obviously we weren't at peak oil, or we wouldn't have the surpluses that we have today. And so what I'm saying is that what you hear on the news, you can pretty much take with a grain of salt. It's meaningless.
Gold prices have had a nice rally. Now a bit of a dip. What's the longer term projection on gold?
I have been saying all along that this was a counter trend rally, and that we should move lower before we get into the 9-year cycle low. I don't remember, but I think what I said last time was that I thought that the intermediate degree advance was probably close to running its course. I think it probably has run its course, the intermediate degree advance, and that ultimately gold is going lower before we get into the 9-year cycle low. Now, that being said, once we get into this 9-year cycle low, I think later this year, or possibly maybe it extends out into early next, I think it's going to be one heck of an opportunity in gold and gold stocks. I think that's the bottom that all the gold bugs are looking for. And I was looking at some stuff last night, just surfing the internet, and everybody's getting excited about gold right here at this intermediate degree top.
Of course.
I think there's another washout. before the real bottom.
I was going to say people always pay attention when things are at record highs, but they don't really notice the product when it's at a low.
Right. And it's just the opposite. Like with stocks right now, you can't convince anybody that well, you know, the people that I guess really know, but the average person, you can't convince them of the dangers of the market. I mean, everything's fine, right? I mean, we're just a few % off the high. Let's set up in Dow theory non-confirmation and Dow theory the primary trend change. None of that means anything. Nobody even knows anything about it. But yet those are definite weights on the market and part of the overall setup. But people don't get it.
Is there a safe haven right now? And I think on a previous interview you said people can, besides aggressively sell or aggressively buy, they can aggressively do nothing.
You can aggressively do nothing, and I think that's the time and that's the place to be here is aggressively. An old man told me that one time. He said, you know, you can be aggressively long, aggressively short, or aggressively in cash. And I think this is the aggressively in cash time because of the risk of the market, the uncertainty, the election in the U.S., the instability around the world. I mean, there's just the overall setup with the market that I, again, sound like a broken record, nobody sees. I mean, this is a disaster waiting to happen. And until this storm passes and we get that flush down, I wouldn't touch equities with a 10-foot pole. And then we have the opportunity coming up with gold and gold stocks once we get to the 9-year cycle low. I think there's going to be a big opportunity coming up with crude oil stocks, some of the commodity stocks, and so forth once we get there. We're not there.
Tim, thank you very much for chatting with us.
Jim, thank you as always for having me. And, you know, if someone has some questions about something, call me. You know, subscribe to the letter, but call me, you know, at very least. And, you know, the email just proves the point. People don't understand.
Tim, so if they just go to your website, they can get contact information there?
Yes, cyclesman.com.
Tim, thanks again and have a good Easter.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Check out our YouTube channel, Talk Digital Network. Find us on Twitter at Talk Digital Net. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.